Something happened on March 3rd, 2026 that most of the financial world completely missed. Not because it was hidden, not because it was complicated, but because the people covering it don't fully understand what they were looking at. A crypto company just received the most exclusive banking access in the United States of America. Direct, unrestricted, Fed-level access to the core payment rails that power every single major bank in this country. And while the headlines were calling it a crypto milestone, the informed investors watching this channel understand something much more important. This is not just about Kraken. This is the confirmation of a blueprint. And XRP sits at the center of what comes next. But before I tell you why this changes everything, you need to understand something that almost nobody in crypto is explaining correctly. Welcome back. Today we pull back the curtain on what Kraken's Federal Reserve Master Account actually means, and more importantly, what it signals for Ripple's full approval. I'm going to walk you through the numbers, the institutional moves, and the regulatory timeline that tells me the most significant announcement for this entire ecosystem is still ahead of us. Let's jump in. If this is the kind of analysis you've been searching for, you already know what to do. Let's start with the hard truth. Most people covering Kraken's announcement are treating it like an exchange upgrade, like it's a feature release, and that framing is completely wrong. To understand why this is historic, you have to understand what a Federal Reserve Master Account actually is, and why it has been almost impossible for a crypto company to get one. The Federal Reserve System in this country is not open to everyone. It is deliberately, structurally restricted. A master account gives a financial institution direct access to FedWire, the core settlement rail used by thousands of U.S. banks and credit unions. When you hear the word banking rails, this is what people mean. This is the pipe. This is the actual infrastructure. Without a master account, a financial institution cannot settle directly. They have to go through an intermediary bank, and that intermediary bank controls the timing, the costs, and ultimately the access. That dependency is not just inefficient, it is a fundamental structural vulnerability. Kraken Financial, through their Wyoming-chartered Special Purpose Depository Institution, a SPDI, applied for this master account in the year 2020. For more than 5 years, under an administration that was openly hostile to crypto, that application sat in a queue, ignored, stalled. The Biden-era Fed would not approve it, not because Kraken was unsafe, not because Kraken was unregulated, but because the political will wasn't there to let digital asset companies into the core of the U.S. payment system. That changed on March 3rd, 2026, when the Federal Reserve Bank of Kansas City granted approval. And this isn't just approval in name. Kraken can now settle dollar transactions directly on Fed rails. They can access FedWire without routing through any intermediary bank. That is categorically different from what any crypto company has had before. But here's where it gets interesting, and most people miss this completely. This approval is structured as a pilot for a proposed framework called Skinny Master Accounts. And the institutions waiting to walk through that same door include Circle, Paxos, Fidelity Digital Assets, BitGo, and Ripple. Let's look at the math that the retail crowd ignores. Because when you see the actual numbers behind the U.S. federal banking system, the magnitude of what just happened becomes impossible to overlook. The Office of the Comptroller of the Currency oversees a federal banking system that includes more than 10,000 national banks, federal savings associations, and federal branches of foreign banking organizations operating in the United States. These institutions collectively hold more than $17 trillion in assets and administer more than $85 trillion under their control. And this is critical. The institutions that make up the federal banking system conduct approximately 67% of all banking activity in the entire United States. 67%. Not of crypto, not of digital assets, of all banking activity in the entire United States. Now think about what a national trust bank charter, specifically the OCC-issued charter that Ripple has conditional approval for, actually means in that context. It means Ripple National Trust Bank becomes part of that system, not alongside it, inside it. with direct access to those rails, with federal regulatory recognition as a legitimate banking institution. Now here's the math that connects directly to XRP. Cross-border payments represent $150 trillion annually. The Forex market processes $7.5 trillion every single day. The Nostro Vostro system, the pre-funded accounts banks park all over the world just to facilitate international settlement, has approximately $27 trillion locked in liquidity at any given moment. That is $27 trillion sitting idle, earning nothing, just waiting to be used as settlement buffer. XRP's entire design exists to replace that $27 trillion liquidity trap, to make it so that instead of pre-funding accounts around the world, a bank can settle in seconds using XRP as the bridge currency and release that trapped capital back into productive use. Now ask yourself, what happens to the utility demand for XRP when Ripple is operating as a federally chartered bank with direct access to Fedwire? The answer is not a prediction. It is a logical mathematical requirement. And when you see the actual institutional moves happening behind this math, it becomes impossible to ignore what's really going on. While retail investors are watching the price chart, the institutional signal has never been stronger. Look at what Ripple actually built in 2025 alone. Through a series of acquisitions totaling roughly $4 billion, Ripple assembled what analysts are calling a complete banking infrastructure stack. Not pieces of one, a complete stack. Think about what that means. You don't spend $4 billion building out a full banking infrastructure when you're uncertain about your regulatory future. You do that when you have visibility, when you know exactly what the approval timeline looks like and you're building to be ready the moment the door opens. Brad Garlinghouse himself addressed this directly. He said, "Banks are our customers. If we want these technologies to have the biggest impact on the largest number of people, banks are the touch point." That is not the language of a company positioning itself against the banking system. That is the language of a company positioning itself as a critical node inside the banking system. And there's another layer here. Ripple employees are publicly describing themselves as middle management at a bank called Ripple. That's not an accident. That's a signal of the organizational and cultural shift that's already happened inside that company. They're not a crypto startup anymore. They are a bank in construction. And if you want further institutional validation, look at the 14-year relationship between Kraken and Ripple. In 2012, Jesse Powell provided a $100,000 seed investment to Ripple, then called OpenCoin. In 2013, Kraken became one of the original gateways for the XRP ledger. In 2023, Kraken led the industry by re-enabling XRP trading hours after the landmark programmatic sales ruling. And today, in 2025 and 2026, Kraken and Ripple are joint founding members of the Global Dollar Network, the USDG. These two companies have been building the same rails together for 14 years. So when Kraken becomes the first digital asset bank with a Federal Reserve master account, and Kraken's approval is explicitly structured as a pilot for other digital asset institutions, you have to ask yourself who benefits most from that pilot succeeding, because the answer is already written in that 14-year timeline. A lot of people find this channel right before things start moving. If you're one of them, stay connected. So I want to ask you directly, do you think Ripple's full OCC approval is weeks away or months away? Tell me below. One word is enough. Let me walk you through the catalyst pipeline, because the timeline is tighter than most people realize. December 2025. The OCC grants Ripple conditional approval for a national trust bank charter. Conditional approval is not the finish line. It is the formal confirmation that Ripple has cleared regulatory scrutiny at the federal level and is structurally eligible for full approval. The remaining step is final examination and charter issuance. March 3, 2026, Kraken becomes the first digital asset bank with a Federal Reserve master account, structured explicitly as a pilot for the Skinny Master Account Framework, which means regulators are now actively building the infrastructure to extend this access to additional digital asset institutions. And then there is Paul Atkins. The SEC chairman said this explicitly. We are on the cusp of T+0, immediate on-chain clearance and settlement, atomic settlement. Not someday, not in a future roadmap. Now. He said every single US market will be moving on-chain. He went back to the 1980s when settlement took 5 business days, T+5, and traced the evolution to T+2, T+1, and now the threshold of T+0, instant, on-chain, atomic. And it is not just the SEC. The New York Stock Exchange has entered active discussions about moving on-chain. The Nasdaq has begun exploring on-chain infrastructure. These are not fringe conversations. These are the largest securities markets in the world beginning a structural migration that will require settlement infrastructure that XRP was literally designed to provide. When the final switch is flipped, when the CFTC, the SEC, the OCC, and the Fed are all aligned, and when Ripple's full charter is approved, the wait-and-see money becomes all-in money overnight. But catalysts alone don't explain why the window is shrinking faster than most people realize. And that's what I need to show you next. Here is something the impatient crowd doesn't want to hear, but it's the truth. The window to hold XRP at its current price is closing faster than the price chart suggests. Not because of hype, because of math. We are entering the transition from the regulatory positioning phase to the integration and utilization phase. These phases do not look the same. In the positioning phase, you see gradual approvals, conditional licenses, quiet infrastructure buildouts, exactly what we've been watching. In the utilization phase, you see volume. You see actual institutional settlement flows moving through this infrastructure. You see demand that doesn't come back down. Think about what happens to XRP's liquid supply when Ripple operates as a federally chartered bank, when Kraken settles transactions directly on Fed rails using digital assets, when US markets begin on-chain settlement, and when the $27 trillion trapped in Nostro Vostro accounts starts being replaced by bridge liquidity. The supply is fixed at 100 billion tokens. Circulating supply is approximately 55 to 57 billion. The exchange reserves have been draining. Once a token enters a multi-signature institutional vault, once a bank holds XRP as settlement liquidity on a balance sheet, it does not come back to market for a 10% profit. It is gone. It is operational infrastructure. The door is closing fast. And the institutions are not going to wait for retail to figure that out before they finish positioning. I know it's tough to watch the red candles. I know the uncertainty in the broader market creates doubt. But as an analyst, I am trained to distinguish between noise and signal. And right now, the signal is louder than it has been at any point in this entire cycle. The noise is the price chart on any given Tuesday. The noise is the headlines asking whether the market is in a correction. The signal is Kraken becoming the first digital asset bank with direct access to Fedwire. The signal is Ripple holding conditional OCC approval for a national trust bank charter. The signal is the SEC chairman publicly declaring that every US market is moving on-chain. The signal is an XRP ledger employee calling himself middle management at a bank. Being early in a structural shift feels exactly like being wrong, right up until the moment the structure completes itself. Every major financial transition in history has had this phase. The phase where the infrastructure is being built, but the price hasn't reflected it yet, where the informed are accumulating while the confused are exiting. The question isn't whether the system is being built. The question is who will still be holding when Ripple's full approval announcement becomes the moment everyone points to and says, that was it. That was when it all became obvious. And that brings me to the most important thing I want to leave you with today, something I don't say lightly. Kraken's Federal Reserve Master Account is not the destination. It is the proof of concept. It is the regulators saying, yes, a digital asset institution, properly structured and fully examined, can have direct access to the core of the US payment system. That door is now open, and Ripple is standing directly behind it. The integration of crypto into the US banking system is not a future event. It is a present construction. The rails are being laid in real time. The XRP ledger was built 14 years ago with exactly this moment in mind, not as speculation, but as design. and design eventually finds its use. In a market fueled by emotion and noise, we thrive on data and composure. History does not reward comfort. It rewards those who pay attention when the room is still quiet. Stay patient, stay rational, stay positioned. I'll be breaking down the next phase of this, including what Ripple's full OCC approval will mean practically for XRP utility, in the next video. If you want to be there for it, you know what to do. Now that you've seen the full picture, what is the one signal you are watching most closely right now? The OCC full approval for Ripple, or the first major US market to officially announce it's moving on chain? Tell me below.